Welcome to CoinShares interview. Today, we are joined by someone often described as the closest living link to Satoshi Nakamoto, Adam Back. We're here to pick his brain and dive deep into one question: why Bitcoin is that important? Hi Adam, thank you for being with us. It's a great pleasure to meet you.
Happy to be talking with you guys.
Before going into Blockstream news and Bitcoin today, I would like to go back in time, if you don't mind. When you look back at the first 15 years of Bitcoin, from hobbyists mining it from laptops to nation-state reserves, how do you reflect on this evolution? Do you think we're still that early?
It has come faster than people expected and with less regulatory hurdles. I know I'm the CEO and co-founder of Blockstream, which is a technology company building Bitcoin layer 2s for retail payments and securities. And so, when we started the company in 2014, we were quite aware of and uncertain about the regulatory attitude to Bitcoin, how that would evolve. So I would say, in 2015, banks did not want to hear the word Bitcoin. If you would talk to them about blockchains, they would be upset if you said Bitcoin. The people would tell you, when you go into the meeting, don't say the word Bitcoin. They don't like it, right?
It was blockchain, not Bitcoin.
yeah, exactly. The blockchain, not Bitcoin. And now it's Bitcoin, not blockchain, right? So already back then, it only took a couple of years till every major bank had a blockchain R&D lab, but it was blockchain, not Bitcoin. Now that's faded. They've gone through that phase. Now they're trying to, compete to get to market with Bitcoin offerings, Bitcoin derivatives, Bitcoin structured products, Bitcoin ETFs, Bitcoin savings plans, pensions, all kinds of things. So big companies like BlackRock, Fidelity, in different countries globally. So I think that it's always seemed to progress much faster. The regulatory risks were much smoother than anticipated. Of course, there was friction, but no kind of major ban or outlawing of Bitcoin in any major country. I mean, of course, somebody is always going to ban something, right? Because there are countries that ban Facebook, they ban Twitter, so of course they're going to do something with Bitcoin as well. But generally, it was less friction than we expected, and the friction has reduced a lot in the US, even in the last, the ETF, spot ETF last year. The new US administration has canceled a number of regulations, improved the regulatory environment, so it's now very open for business, and even moved the overturn window that the US administration is even talking about strategic Bitcoin reserve, initially hold onto the seized assets from criminal cases, and even potentially buy. So I think that just moves the conversation forward. It makes it easier for institutional fund managers, people in pension funds, sovereign wealth funds, endowments, to, even if the individual professionals are personally invested in Bitcoin, it makes it that kind of national and regulatory support, and that they can point to BlackRock, they can point to the sovereign wealth fund in Abu Dhabi, they can use all these references, becomes much easier to introduce Bitcoin as a policy to, put into a mutual fund allocation or into a pension fund, or to recommend for their advisors to recommend to investors. So I think it's a very interesting time for Bitcoin. I think that's underappreciated, undervalued. It's just that the institutional process takes longer than people think. They have to, provide materials, they have to train advisors, they have to agree on policies, and it's taking time. But it's in motion. Regulatory barriers are much lower now. The allocations are already coming, just in small amounts at this stage, and more institutions falling into place. And of course, the stream of news flow about different institutions, disclosing that they're working on something or something's coming.
There are still a lot of uncertainties going forward, especially one that stands out is the concentration of coins within certain hands. Isn't it a systemic risk for Bitcoin?
I think ultimately Bitcoin is going to get financialized because, if you go back to Hal Finney's view that eventually we're going to be on a Bitcoin standards, before Safedine wrote the Bitcoin Standard book, and Safedine's ambitious, right? He means that the world's stock phases, moves back to a gold standard, but using Bitcoin, so full adoption.
He even talked about Bitcoin banks.
Right. Now, it is important for the free market to resist change, or to have inertia against change, to be immutable, that a good proportion of Bitcoin is in self-sovereign control, like private keys, hardware wallets, individual control. So I think there ideally should be a proportion of that, but ultimately there's also competition between financial service providers. So, if one custodian, one ETF, one strategy company does something that its shareholders or its unit holders don't like, they will switch provider. So you do have some defense. I think it's important to not build up too much risk in one individual provider and to use best practices. Self-custody is not without risk too. So, for the people that have learned it, it's not that difficult. You follow some procedures, you learn, but for some people, it's not for them, right? And or they really don't want to do that. They don't know how to do that. They're worried about doing that. Then for them, maybe the right choice is to use a custodian, right?
Although with Blockstream and yourself are working on different use cases, especially payment one, with Lightning, with Liquid. So far, the main one for Bitcoin is still being a store of value, far from the Satoshi white paper. And one potential issue is the lack of on-chain activity, especially for Bitcoin miners and the Bitcoin miners business model. Are you worried by the fact that currently, right now, mempool is empty?
Not so much. I mean, I think one of the factors, so there's a couple of things going on. So one is that the on-chain capacity, it's going to oscillate a bit because what gets processed has to fit within the maximums. And so if the demand exceeds it, the fees will go up, and some use cases will decide that's too expensive and they'll move to Liquid or they'll move to Lightning or they'll do something else. So then, if that use case moves or the market shifts a bit, then it will be lower again and then it'll pick up again. So it's it will oscillate within that range. Then I think the other sort of fundamental factor, which is showing the imbalance between capital deployed for retail payments and savings, is that the velocity of money for retail payments is very fast. The merchants tend to immediately sell it for euros or dollars. The money is the capital that's allocated to provide liquidity for those payments is very high velocity. Whereas if you look at the savings case, it's very low velocity. People make an investment and they hold it for 5 or 10 years. So it's a huge imbalance in the velocity. So that explains the difference in capital allocation. So I think that's why, at least for now, the price is dominated by the savings use case, just because it's lower velocity. And what Bitcoin investors tend to get into a mindset of saving and investing and less spending. And so, the amount of money they're able to save in many cases is larger than the amount of money they're spending. So there's going to be an imbalance, even if it's the same user. They put 10,000 euros in savings and they spend 100 euros, and 100 euros is high velocity. So you're going to get that kind of bias. But I do think the global permissionless money is very powerful. It's part of the value proposition. Yeah. Saving is also a form of spending because you sell some in the future to buy something. The addressable market for global internet money is enormous because there's an OECD report showing that about 50% of the global workforce is undocumented. No bank account, no contract, paid in cash. So effectively no access to the global economic system. And so I think that's the addressable market. That ultimately for any of those people, whether they are in emerging markets or they're nomads, they're moving around, they're in a cash economy, Bitcoin is a global permissionless access to that market. And so that effect hasn't taken place yet fully. So I think there's a lot of upside in that area as well.
We haven't really mentioned Blockstream yet, actually. The company is focusing on mining, on launching satellites to distribute the network, on building hardware wallets. And you face some critics who can argue that sometimes you contribute to centralize the network itself. How do you respond to that?
Well, I mean, we are really sort of Bitcoin mission companies. So we want to help Bitcoin achieve its potential. That comes on two sides. One side is the retail payments, the bare electronic cash. So we're manufacturing, selling hardware wallets to encourage people to cold store. We're making Lightning for retail payments. And on the other side, it's the technology for custodians to use to store Bitcoin on behalf of users, and the technology to use the robust and dependable Bitcoin technology in the form of Liquid, so a layer 2 for Bitcoin, but using the same technology to be a settlement and custody technology for all kinds of securities, shares and bonds and convertible notes and all these kind of structures, to have the same benefits of an open, decentralized network for electronic cash, to have that kind of innovation come to the financial world using dependable technology. So we built Liquid. And of course, there are very different customers for this kind of technology. There are companies, there are individuals, there are people in emerging markets, people in developed countries using it for different purposes. So I think it all forms part of the adoption and financialization of Bitcoin. I think that if Bitcoin reaches its full potential, it will be used by everybody, including what some of the early adopters would consider, the establishment that they were hoping to, have self-sovereignty to protect themselves from. But I think ultimately the game theory of Bitcoin, economic game theory, seems to be more scalable than you would expect. I mean, it's kind of a shared experience of watching it as it evolves, but it does seem that it's scalable and that it seems to positively influence everything it touches. So people say Bitcoin fixes this, but really I think the point is that incentives matter. Having properly aligned incentives and dependable money is a positive driving force for human behavior. So even though Bitcoin is ultimately some cold mathematical code, has a very positive effects in providing a dependable incentive background for human action. And that seems to scale from individuals to companies, to public companies, to pension funds, ETFs, governments, politicians, bureaucrats. Seems to work for everybody. And realistically, for it to reach its full potential, it's going to, to get the 200 trillion market cap that Hal Finney, or probably Saif Dean would think about when he's talking about the Bitcoin standard, and Michael Saylor is talking about when he's talking about adoption. That implies, full financialization and use of Bitcoin, new rails, new adoption, the asset class being in all kinds of places. And the treasury companies are showing that you can run a company using Bitcoin, the asset class. So it's almost a preview of when this dislocation is fully arbitraged and normalized of how the world can operate on hard money. So basically sort of recentering of the world back to a kind of gold standard, but a digital gold standard. And the human lifespan, we only really have the experience of a fiat currency world, but the fiat experiment is actually a very short period of time. Before there was hard money, and there is still a large allocation to gold. Most governments have gold reserves. And the last major currency to leave the gold standard is actually the Swiss franc, surprisingly recently, like 1999. A few years ago, they had a referendum to bring gold back, and now they're trying to take a run at a new one, which is to bring gold and Bitcoin into it. So, I mean, the Swiss National Bank is quite an effective hedge fund. In effect, they're effectively managing sovereign wealth quite successfully. And it's a very strong currency, actually, even though it's a country with a population of about 7 or 8 million. Economically, it's significant because it's a kind of asset management center. Yeah, I think we'll see how that initiative progresses. But I think everybody has their experience and their hopes for Bitcoin. But as long as Bitcoin serves the self-sovereign ability, you can manage your own private keys and you can trust its immutability, then the fact that it scales with different kinds of organizations and becomes a global phenomena that just permeates all of financial activity is probably inevitable. So, it's not what people expected, but it is, I think, going to end up being part of the picture.
If I'm not mistaken, you're quite skeptic about the current risk of a quantum attack on Bitcoin. Nonetheless, would you be in favor of burning quantum vulnerable coins like James Dunlop proposed?
Yeah, I mean, I think the risk is further away than the news flow suggests, because in reality, the technology is kind of physics experiment stage. I think the best quantum computer was able to factorize the number 21, literally determine that is 3 times 7, which is like, we learned in primary school, right? So it's not a supercomputer at this stage. So the question is, can they scale it many orders of magnitude? And so, this kind of pattern has been going on for decades. I remember this in university, like 3 decades ago, they were already like, oh, we have a 2-bit quantum computer. It's the same story, right? But eventually that will start to compound and they will have something. So then, as you said, the question is, if eventually, and there are solutions, right? You make a different signature scheme, which is secure against this type of hardware. and you add it to Bitcoin. And Bitcoin introduced a Schnorr signature a few years ago. It can introduce more signature schemes. But the question is, what about the coins that didn't move? That didn't react and change, move to a new signature scheme. Yeah, I think you've got an unfortunate choice, which is that the people with the quantum supercomputers could eventually take them. My personal view is that it's going to be a better choice to give people a decade to upgrade, and then, okay, we're going to, the Bitcoin ecosystem would soft fork to make that deprecate that signature scheme, and then, and of course some coins are lost, so they're not going to move, so that will. Presumably, eventually, this will become a consideration.
What do you think about the current state of Lightning?
So I was talking to some people working in Lightning recently, and in the sort of business development adoption, apparently it's still growing exponentially in terms of the wallets and the transaction rates, because it's very high velocity. So even though the liquidity in there is about 4,000 Bitcoin, the velocity is improving as it gets more efficient. So I think it's still very fast-paced and quite a lot of early-stage investment in Lightning. A new phenomenon in Lightning is nodeless Lightning, which is actually a liquid wallet that looks like a Lightning wallet and gives some advantages. So it basically turns out that this type of wallet gives you the advantage of the custodial Lightning wallet, like Wallet of Satoshi, which has got centralization and custody risk. It gives you the advantages of that, which is cheap and it's fast, and they can manage channels because they can amortize the cost across many users without that centralization risk. And so how it works is that the wallet holds liquid Bitcoin, and when you want to pay a Lightning invoice, you call a trustless swap provider that swaps liquid Bitcoin for Lightning using a submarine swap. And when you want to receive, you ask for a Lightning QR from the swap provider, and it converts it to liquid for you. As a side effect, you can receive Lightning offline because that swap provider is online even if you're not. And that's quite rapidly growing. There's Aqua Bitcoin, Bull Bitcoin, Peach Wallet, and now Breeze, which is the big API provider. They have a wallet, and their users have a choice to use the LSP-based node Lightning or the nodeless Lightning. And the nodeless Lightning has these advantages for many use cases. So I think that's growing faster. Now, it does have some limitations. It's got some higher minimums where the liquid fees start to become expensive. But it's easily able to do 50 cents, $1, but it can't do like 100th of a cent, which you could do with the regular Lightning. So that's the distinction.
Even with Lightning, do you think that Bitcoin is private enough?
Well, I think improved privacy in Bitcoin would be good, desired by the users. Lightning has some privacy provisions. Liquid actually has some different privacy provisions. So by using Liquid, you get a different kind of privacy, which is confidentiality. So it hides from the block explorer and the network nodes how much Bitcoin is in your UTXO. Or even if your UTXO, because Liquid has asset support, if your UTXO is Tether or a MicroStrategy share, you look in the Block Explorer, you can't tell. But if if it's me paying you, settling the dinner bill with Liquid Bitcoin or with one of these Liquid swap to Lightning, it's kind of Lightning experience, then on a Block Explorer we can see how much it is, but nobody else can, and they also can't see whether it's Tether or something else, right? So you do get that kind of privacy, but ultimately the UTXOs are still there, and you can still see that this UTXO was input to that UTXO, so you can look at the graph, but you can't see the amounts. So it provides you, it's called confidential transactions, so it's providing confidentiality, but not the payee privacy, I would say.
Is there any technology upgrade, maybe coming from altcoin, that you would like Bitcoin to implement?
I mean, it's an interesting question because you would hope with the amount of capital deployed into the altcoins that they found some innovation. And sadly, I think the capital efficiency is quite low, but they have funded some fundamental research. So they've allocated from the altcoin budget to research firms like doing zero-knowledge proofs and snarks and stocks and things like that. And I think that technology is independently useful and is starting to be used in Bitcoin layer 2 or integrated into Bitcoin or even on-chain Bitcoin with some of the kind of variants of those kind of proofs. So I think that's the area. Now, of course, that technology didn't exist when Bitcoin was released. So it was a more recent development, and it's still rapidly evolving technology that's becoming more scalable, more secure. So there's potential in that technology for Bitcoin scalability and Bitcoin privacy, actually.
Flashround, if you don't mind. Which altcoin would you keep?
None of them.
None of them.
I would buy Bitcoin treasury companies. It's not an altcoin, but it's not Bitcoin. So.
Fair enough. One cypherpunk who matters.
Interesting. I mean, Hal Finney was prototypical cypherpunk. It's philosophical, but it's also implementing things and writing and explaining things. Good guy.
Okay. Worst idea you've ever seen in crypto?
There's so many. I mean, there was a period which has become more, I think people learned through the experience, but where blockchain was a magical thing that was going to improve anything it touched. And people wanted to put anything into a blockchain, medical images, PDFs, and like a blockchain has to be space efficient. It's the wrong data structure, or voting, or all kinds of things. And so I think the blockchain is really optimized for transactional use cases, payments, settlement, swaps, simple smart contract execution. So lots of bad ideas, but they are narrowing back to the core value and the core asset.
Self-custody or ETF?
There are advantages to both. So personally, I've done both. And the advantages to the ETF is you can mix it with your stock portfolio and get a cross-collateral value. You can borrow against it at a low cost. The advantage of self-custody, of course, it's sovereign. It can't be seized. So it's a trade-off. But I do hope that some reasonable percentage of Bitcoin remains in self-custody for the immutability guarantees. So we rely on that community of technology-aware, committed investors to keep the network honest, I think, via their kind of activist investors, right? Rooting for Bitcoin to stay immutable.
Thank you, Adam.
Thank you.